Please read this disclaimer carefully before proceeding further. Welcome traders to this week's analysis of dollar index. Thanks for joining me in this analysis. My name is Vic. If you have been following my postings on DXY, you notice that I was long from here because we found a very good area of confluence here. There was a proper Fibonacci confluence zone here, which actually told us in the month of July, late month of July, and throughout the August that September month was going to be bullish. And now we are done with September 2020 and we are in October now. This is the candle which was printed in the month of September. We were expecting a bullish movement like this because there was an M pattern which was completing and we had a very good Fibonacci confluence zone there. We're going to have a look at that in a second. But before we actually proceed any further, if you think if you are new here, if you think what I'm talking about, what zone and what analysis, then I strongly suggest you to check out my previous week's analysis on DXY. I'll post a link of the same in the description of this video, and you will also find that in one of the suggested videos of this one. And there I have covered all the aspects of DXY. I've taken I've started from very high time frame. I've gone through all the aspects, all the conditions, all the cases of DXY, why DXY is supposed to move up or down, what are the conditions, where can it go to, different perspective of it. And there's a lot of educational content in that video as well. So if you haven't actually seen that, go and check it out. That will show you exactly what I mean. It will tell you what we are talking about. But we were expecting market to go upwards in the month of September. And to my private group, basically I said to those people, I said if this candle closes above the previous high, then there are more chances of it actually going upwards, straight upwards in there. But that did not happen. On the last day of September, it tried very hard. It tried to go back up, but then fell down. It came short of that, which basically means that now we are struggling, and there can be a chance where DXY can fall up to 92.87, or even in extreme cases it can fall down to 90 as well, because we have a very good M pattern completing around 90 as well, 89.9 something, around that level to be precise. So what we need to do is we need to if you are long on DXY, or if you are using DXY as analysis for other markets, then you need to be aware of that scenario, that DXY can fall up to 93 or even further down to 90 level. That is a possibility now, because it failed to close above the previous high of the high of the previous month. This looks like a very good engulfing candle, which it is, but so far what I can see from my experience is that this is not even that strong of an engulfing candle, because I wanted that body to be somewhere around here. So that actually creates this possibility that it can go down. Other factor is that market has been actually bearish for quite some time, so it won't give up that easily. There was initial reaction to the upside where we were able to capture a lot of trades, but after that it may try to resume the previous bearish momentum. So in this month, this month is going to be very, very crucial, because it will set the tone for the rest of the year, and it will tell us whether it wants to go down and stay down. It's quite possible that market may go upwards and come back down, or it may go down and come back up. So there can be both scenarios. There can be indecision, and as you can already see in past 2 days, market has not been able to decide. It is forming an indecision here, and the reason behind that is, again, market wants to go upwards because there are chances, there are patterns there. There are several confluencing things which are saying that it should go up, but there are other factors which are saying that it must go down, the bearish momentum and the failure to close above. So that's why indecision. And in this indecision, you do not have to go for extended profit targets. What I will be personally doing is I will be taking longs and shorts for quick profits. I'll still be trading swing trading, but I will not go for extended profits. I will just get in with confirmation. In our strategy we use 5 different confirmation techniques. So we will go in there with one of our confirmation techniques, and then I'll take the quick profit, get out, reassess the market, find another opportunity, and then go back in. Okay, so this is what we are going to do. Now as we can see, the market can, as we'll establish, that market can actually fall or go back up, but if it starts to fall, then it near about 90 level is going to be the one. Now I've already been iterating it, and I've already mentioned in my previous analysis that we possibly have inverse head and shoulders pattern here as well, and there is a case that dollar can actually rally all the way up. It can actually break through this level as well. So the longer period time frame may or may not be suitable for you right now in this month of October, so be careful with that. Okay, if I go to the weekly time frame, what we can see that market actually tried upwards, and this is where our FCP zone was, and that's why we were able to take a short here. And if you're not trading DXY, you were able to take longs on EURUSD, AUDUSD, gold, and other places, but I was also able to play USDCAD short similar to this, and I was also able to take very nice gold long because I was expecting DXY to fall down. And the reason behind that is because we have an FCP pattern which is completing here. There is a W pattern here. So let's bring in our original analysis. This is what we had. So in the previous analysis, which if you have missed out, go and check it out. It's very important for you to actually go through that. We knew that this is an inverted head and shoulders pattern which is actually like forming right now, and probably the market has come back to retest that neckline. So if this neckline is broken, then obviously we won't have this inverse head and shoulders pattern in there, and the market may start to go down to 92 level. And if it starts to fall down, then 91.989 again, and if it starts to fall down, then approximately 90 level is there. There can be few minor levels here, so we will have to analyze them once the market has started to move and started to create new structures around there. So we'll find more levels, but this is the level that we are looking at if this FCP zone is broken. But in the month of September, this was very precise entry. We were able to plan a lot of positions based on this movement, and these levels are still working. So I'm not going to change anything in terms of analysis. Everything is perfect. The analysis that we performed last time is still valid. So market came here into this FCP zone and started to fall down. This is what we predicted, and it has actually worked out very nicely. We were able to take very good positions on other pairs, not on just DXY but on other pairs, because dollar is going down, so other pairs are going to be affected as well. Now from this FCP zone, this is a critical decision making zone for DXY. If it starts to go down below 93.60, then next level is 92.89 as we established, and if it starts to go back up above 94.03, and if we get a confirmation here, then we can go back into this FCP zone, which is around this level of 94.62, 94.63, and if that is broken, then we are looking for near about 95.51. In fact, this can actually go a little bit higher into 96 area as well, because if I go to the weekly time frame, this is where our mid of the Bollinger Band is, and you will also notice that probably it is going to create another W pattern which is going to reach somewhere around here. If you want, what we can do is draw Fibonacci on it, and you'll see that it has come to 38.2. that means it is expected to go to 78.6, near about there, but we also have 61.8 Fibonacci level right there at that FCP zone, and we also have the previous structure level little bit like that. Okay, so that's why we have this FCP zone, and that is our trading plan. Remember, if the DXY is supposed to fall, then EURUSD, AUDUSD, GBPUSD, NZDUSD, gold, silver, Bitcoin, all those things are going to go up. Now what we can see from the daily time frame here is that there has been a lot of indecision candle, although this turned out to be indecision comes inverted hammer, then there was indecision here. All these three candles are indecision sort of candles, but at the same time we will have to wait for the Monday opening. If it actually shows good strength in the market, that can be an initial signal for strength in the dollar. And if that happens, I will personally wait for 94.03 to be broken for any sort of long position for either swing trading or little bit of day trading. Similarly, if 93.60 is broken, then only I will look for short into 92.89. So that's my trading plan on DXY and full analysis. If you, as I said, if you want, you should actually go and check out the previous week's analysis, because that is very, very thorough. It has a lot of educational material in it, and you will find a lot of good points in there. In case you want to learn more about FCP strategy, Fibonacci Confluence pattern strategy, a new brochure is available on Vikinsa.com, and this is the brochure that we cover. It's an extensive course which runs for near about 2 months or so, and we cover all the aspects, and we take you through all the aspects of how do we analyze this and how we predict the market using FCP strategy. So if you found this useful, then hit the like button and put in a comment, and do not forget to share this video with other traders and trading communities. I'll see you in the next one. Have a great trading week next week. Thank you. If you are interested in learning how to analyze the markets the way I do using Fibonacci Confluence, then head over to Vikinsa.com, and under training section you'll be able to see Core Strategy Training Program. On this page you'll be able to see the testimonials of previous students and also look at the brochure. The brochure has a lot more information, including the course structure and the Fibonacci Confluence Training Program curriculum. This is a very extensive program in which we cover basic core Fibonacci concepts along with the advanced concepts to analyze the markets with high probability. If you're interested in joining this program, come to Vikinsa.com, and under training section you'll be able to see and submit this form.